Alright, so first things first, to start the day off, you look at the previous day. We were bullish, and we had change state of delivery, market structure shift towards the new day. Once the new day opened, that's what we did, change state of delivery, market structure shift to the downside. My mistake here was, if I draw the fib now, not the fib, the volume profile. If I draw the volume profile now, how do I lock it? I'm still getting used to the desktop version, guys. Bear with me. But my mistake was here, so as you can see, I drew the volume profile. It tells you you have imbalances right over here. My mistake for today was the fact that I didn't align the volume profile with my fib, which is what I should have done. So let me lock that. So for OTE, we're only looking for support or rejection at the 61% and the 78%, because those have the highest chances of providing a plus setup, as opposed to the equilibrium, and then these 38% and 23% ones. Then that would be more just like fib trading. I'll show you an example of fib trading here in a second as well. So we know, or we should have known, now that I've finished the day and analyzed my mistakes, we should have known that because there's no OTE here, whether there's technically sometimes when it's a SMT or a strong move, the equilibrium will work, but as you can see here, we broke right through it, so we disregarded that. And then there's none on the 15 time frame. The next one would be up here on this what's it called, on this hourly fair value gap. Over here you can see you have a small imbalance, very small, as opposed to these other ones. So how do I explain this to you guys? So this would have been our main imbalance, but because there's no valid OTE here, because you can see how this one has a less amount of sellers, so there's less orders filled here as opposed to this one over here in the OTE range. That's why this one over here would have been no good. And yep. So then let me show you my trades. Right over here, came into the fair value gap, the OT fair value gap. Change state of delivery fair value gap. I got kind of a late entry, just because I was a little bit uncertain. Just because of the price action and everything. But this was my entry. Got entries. I got filled right there, and then before I got stopped out, I just sold because I realized that that this trade was not gonna work out. This second entry over here came from the sweep of intraday daily highs. So I tried it out, changed data delivery again, market structure shift right over here, and we entered on the fair value gap. And once again, I noticed we were in the wrong trade, so I quickly exited, and I'm up 90 on the day. We didn't take any losses, but we didn't take any wins like we should have. That's alright though. Small wins over any type of loss. But then as you can see over here, after we swept yesterday's daily high, shoot, let me zoom out. Over here you can see New York PM high. Come over here. we sweep into it. Just takes a little bit of time before we make a change to state of delivery. Um, Instantly off of that change to state of delivery, you can see it created a fair value gap over here. You draw the volume profile for confirmation. Just lock that in real quick. And this is the trade that we missed. I probably could have gotten into it. I saw the alert on my phone, but at that point I was cleaning my room and about to get in the shower and everything, and I had already taken two not so good trades, so I decided to call it a day. Unfortunately, this trade was the one that would have really played out. So you can see here, you got the imbalance because the least amount of sell orders were filled right here. And as you can see, there's no buy orders, so that's the imbalance. That's where you would have entered. I like to put my entry a few ticks right below just because it doesn't always fill to the equilibrium. And let's say we entered at 139.50. Barely any drawdown, as you can see. Oh wow, really barely any drawdown. Okay, and we would have been targeting the lows, New York AM lows right over here. That was New York AM. That would have been, wow, that would have been a lot. That would have been a lot of points. Like 200 points maybe. Already off of that. And then we got the full expansion, as you can see, because we had a lot of built up liquidity from the past couple of days. Sweep of the all-time highs. We come chasing down this liquidity. And alright, so now let me tell you guys how I knew I was in the wrong trade. Let me see how long this video is turning out to be. I don't want it to be too long. Okay, I can't tell right now. Hold on, let me see. Okay, I can't tell. Anyways, let me tell you how I knew I was in the wrong trade when I realized, and then how I came to the conclusion that I made quite a few mistakes today. So again, over here you can see we respected this fair value gap and we proceeded to trend upwards, but no instant change of state of delivery, as you can see. Towards the end of London session, market structure shift. If you draw the volume profile, you can see on the hourly there's no imbalance, but if we go on the 15, you will see one. But then let me show you where my mistake is. At this point, I didn't draw the fib, but I'm gonna try it for you guys just so you guys can realize the mistake that I made. And this is why from here on out, starting tomorrow, I'm gonna draw the Fibonacci first and then overlay the volume profile. So if you look here, 61% and the 78% have no OTE setups. They've already been filled or there's just none available. 0.5, there's just none either. And then the only one available is the 38%, which is high risk. But let me know, or let me show you how I knew that we were in the wrong trade. So over here you can see the imbalance again. Let me show you the bullish imbalance. Over here you see 0 sellers and the least amount of buyers. That is our imbalance that we can see on the volume profile. Unfortunately, it didn't align with the OTE, which is a high probability. Instead, it aligned with the higher Fibonacci, 38%, which is not OTE. So it's not a trade we would have necessarily been looking for, but it's one that you could have taken. And let me show you how. So you saw that 15-minute fair value gap that was marked out by the Lux algo. And then over here, you can see instantly just this like terrible price action. Terrible choppy price action. Usually what we want to see is a pretty quick change in state of delivery or market structure shift with the fair value gap. Here we made a quick change in state of delivery, uh, but there was no fair value gap, and I believe we had broken um, one of these fair value gaps, broken through them. Anyways, no fair value gap here created. Those you can see this one. The Lux algo alerted to this one, but it got disrespected. If you would have put your stop loss here, you would have had to put it all the way down here. If you wanted to really catch it, even though it's not OT, but you were confident about the setup, and I got this one. I got this one from Dodgy. I used to never actually do this. If you guys know Dodgy's D&D, he's another ICT trader. He's very active in the X community space. I picked this one up from him. I didn't previously know it, but I don't really incorporate it into my strategy just because I like the 1 minute for precise entries. This one's more of like a late entry with a higher drawdown, but it works if you know the bias. So we knew there was imbalance, bullish imbalance right here. 1 minute is choppy, so then I looked at the 5 minute and then I could see that it's trending upwards. It started trending upwards, and then you can see right here on this 5 minute candle, once it started trending upwards, that's when I decided to close out my first position. So we didn't take a loss on that one, we just exited out early. And then as you can see, it would have gotten to full delivery all the way to the previous day highs, but you would have had a lot of drawdown had you entered on the close of this, which is the way Dodgy's DD teaches. You would have gotten a retracement to it, but sometimes it leaves you behind to this fair value gap, and it's higher drawdown. It's a higher drawdown too, so not that great. But if you wanted to catch it, you could have caught it that way. I decided to take very tiny profits and be done for the day. But those those are my thoughts on everything that happened today. Hopefully you guys can learn from the mistakes that I made here today. Hopefully everything I explained to you guys made sense. Yep, I'll see you guys in the next one.